Hi, everybody. It's Jeff from the Mortgage Minute. Welcome. Happy Veterans Day. I want to say hi to Jay, my cousin, as well as Will, my niece's husband, and of course my nephew, my niece's son, William, all veterans, and thanks for your service. Interest rates today, it is a holiday, so the interest rates haven't moved all that much, although they are down somewhat. 3.19 for the 30-year fixed, 2.55 for the 15, 2.68 for FHA, and 3.10 for the jumbo loans. That jumbo product has remained at about, there's a range between 3.5 and about 3.15 for the last 6 months. Jumbo product doesn't move that much. It doesn't get sold to Fannie Freddie, therefore the investors of these products are pretty secure in what they're lending out and what they're buying. They're usually 25-30% into the loan by the individual who is buying or getting the loan, and so therefore the 60, 65, 70% of the loan of the jumbo is pretty secure. That's why the rates don't move that much. It's 2.88 for the 5/1 ARM. The 5/1 ARM has actually moved up and down quarter basis points over the past week. I'm not really sure why it does that. Maybe it's the volatility of the situation and not quite knowing whether inflation is going to overtake any of the gains that we've all made. Well, people who have been making those gains, who have gotten good salaries or better salaries, or the wage increases that they have received. Inflation's a big issue, as everyone knows. It's a political issue as well as a practical issue. Gas prices at well over $5 in California, probably going to stretch that way throughout the winter, as I said in many of my posts. And also, this particular show a couple days ago, home heating oil takes the #1 slot. So if we're looking at shale oil coming back to the marketplace in a strong way, it's probably going to go to the refineries and come out as home heating fuel as opposed to gasoline. Summertime is when gasoline gets more plentiful, and that's when we're going to see probably a break in the gasoline prices. We have seen some movement, as I said, with the shale oil industry in terms of producing more, and that is happening, as well as the refineries coming more back online. When will the Fed step in? That's a good question. They're balancing recovery versus inflation, and so turning off the spigots to fund the particular recovery versus raising interest rates, which will cool down the investment, cool down the borrowing. It's a call they're going to have to make. Another call that's going to be made by President Biden is to see who's going to head the Fed over the next few years. I guess there are 4 or 5 year terms. Jerome Powell is in now, and there's another Fed governor who is up for the job as well. It's probably a 2-horse race at this particular moment. I'm not quite sure whether we're going to go dovish or hawkish. Hawkish meaning raise interest rates soon. Dovish meaning no, let's let the markets play out a little bit more and be more accommodative to them, i.e. easier money, easier monetary policy. All of these are important things, and that's going to be up to the next Fed chair. Evergrande back in the news again. They did make their bond payment to the dollar bonds that were outstanding. That's a good thing, although I do think that at one point we're going to see a big implosion in that market in China. How it affects the rest of the world, I'm not hopeful that it won't. I think that it will. I think that spooking the markets based on defaults in huge sums in the Chinese development market to the tune of, could be $1 trillion that go default. That's going to affect not only what happens there, but what happens across the world. I think it's a good thing in that demand will be less in those sectors, therefore easing some of the supply issues around the world, therefore easing some of the price pressures. But at the same time, it's going to spook credit markets, and therefore getting a loan is not going to be any easier than it is right now. Credit markets right now are already tight. You don't think so, but they are. And so, therefore, the lending to you to get a mortgage at a certain rate in a certain way may become harder first of the year. I'm Jeff Parton, your voice in the mortgage industry. Thanks very much for tuning in, and we'll see you next time. This has been the Mortgage Minute.